Have you ever wondered how high uni could go in terms of price in 2025? Well, in today's video, I'm going to be sharing my 2025 price prediction for Uniswap's Uni token. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's go ahead and jump into the charts and take a look at where I think the price action could be heading. Okay, guys, so we're going to kick things off by jumping down onto Uni paired up with USDT. We are on the 1-day Binance chart. Now, in order for us to be predictive over where we think the price action could go, we're going to have to use a couple of tools to help us understand kind of the sentiment that's behind the price action and try to be predictive. We can't just use technical indicators on TradingView because technical indicators only look at past performance and basically don't really give you any predictive capabilities. You have to make a lot of assumptions that certain things are going to happen. However, there are two tools that are actually quite useful for understanding the psychological psychological elements to the market. Is probably a good way of articulating it. Ways to be predictive over people's behavior, rather than just taking a look at something like a MACD or a trading view indicator. So one of the ones that we are going to use is something called a Fibonacci retracement and extensions. Okay, this is quite a common tool. People would probably have seen this a number of different times. I use this pretty much every single day to be predictive over where the market is going. Now, the Fibonacci sequencing numbers are quite vast. There's quite a few of them, but there's really just a few that are quite standout and quite important. If we go into the settings here and come over to my style tab, you can see here the numbers that I'm going to be using. 0 and 1 are basically the measurements of 0% all the way up to 100%. And then in the middle, you have a 0.236, 0.382, 0.5 isn't technically a Fibonacci sequencing, but it's an important level nonetheless. 0.618, 0.786, and then we've got some extensions, 1.618, 1.382, 1.236. I do include a 0.882 and a 0.702. 882 is very important. 702 is an interesting area that's not technically a Fibonacci sequencing level, but is a very interesting point for crypto because it does react. The market tends to react at those particular levels. The other important thing on the settings here that I'm just going to point out is that fib levels are based on a log scale. This is important because my chart is in logarithmic, therefore my fibs need to be in logarithmic. If I do not have this box ticked, you can see how the numbers change on the chart. Okay, very important that we have it based on a log scale. Okay, so those are the settings, and that's the first tool. The second tool that we use is price analysis. Now, I use Elliott Wave for price analysis. Elliott Wave tracks people's behaviors. It runs in what they call waves, either 3 waves or 5 waves. So you have 3-wave patterns and you have 5-wave patterns. There's a few different variations of each of those, and I did put together a whole course on Elliott Wave, so go ahead and check that out, linked in the description, or join us in our free Discord server and we can continue and I can kind of point you to the right direction and kind of help you understand Elliott Wave a little bit more. Now, Elliott Wave is basically tracks the behavior of the herd. So the majority, what the majority are doing from buying and from selling, and their behaviors allow us to be predictive over the future. Okay, so Elliott Wave is a complicated and complex subject, but it works incredibly well in conjunction with those Fibonacci levels. The two things go hand in hand. So those are the tools that we are going to use. The second thing, or the third thing that I need to kind of talk about here, in order for us to predict out 2025, we need to be able to appreciate the sentiment that went into 2025. So we're going to take a look at the sentiment of everything that kind of built up in 2020, 2021, the buying and selling behavior in that, all the way through the selling and buying behavior that we saw in 2022, all the way into 2023 and 2024. Okay, this is going to be a precursor to how the performance is more than likely going to go in 2025, because behaviors and how they have behaved, or how buyers and sellers have behaved, is an indication of how they are going to behave next, and that is the power of Elliott Wave. So let's go ahead and take a look at this in a little bit more detail. Okay, so we saw, at least on this Binance chart, an origin date. Okay, this origin for Uni comes in at 30 cent with an automatic rally that quite lasted a very short period of time up to this high of $15, cooled off and then rallied up. Now for that part we have to kind of ignore it because it isn't actually that indicative of the sentiment. It's basically just liquidity coming in and out of the market very rapidly, and as such you see these spikes. What's more important is to take a look at how the behaviors led into the kind of peak in 2021. Okay, and if I go ahead and just snap this on here, the peak was $45. And we can take into consideration that low point after this initial launch, we can see down here, was a low of $1.75.6. So the difference here is you have to ignore this kind of initial kind of period in time because it's not actually helpful to you. And instead, we want to take a look at the behaviors of what happened during that previous bullish market. Okay, how were the behaviors in there and what do they mean going further forward? Well, we can see here a very impulsive, and impulsive means trend-based movements to the upside during these lows, right? And lows of November 2020 up to those highs that we saw in May of 2021. Now, anyone who's kind of been familiar with the crypto market knows that the majority of projects, cryptocurrency assets, actually peaked in November 2021, whereas Uni here did not. We actually had a peak a little bit earlier. So for Bitcoin, we actually had a double top situation. Okay, so I say double top, but we had a $65,000 high for Bitcoin in kind of May time, 2021, and then we had a $69,000 in November, right? So many altcoins kind of had this initial surge, a correction, and then a final kind of blow off top before going into a bear market. Uni didn't see that. Okay, so instead, what you see here with Uni is a completed structure from the late 2020 into early 2021, a very short period of time. Okay, now I think we're going to be seeing something different based on the current behaviors, but we can see here this was a bullish market for Uni that lasted only 181 days. So it was over pretty quickly. The structure that led into this, as I said, was impulsive with what I believe to be a diagonal ending. Okay, the diagonal ending is quite an important one because it allows us to kind of see how we kind of finished off our structure. But ultimately, we can see a 5-wave pattern, wave 1, a wave 2, a wave 3, 4, and then final 5th wave movement like so. This is actually quite important. Obviously, taking into consideration all of this starting position, we're not going to utilize that because it's not good for sentiment and understanding the buying behaviors. It was a lot of FOMO, lots of hype, lots of liquidity coming in and going, and then basically we got into the main event. Then, of course, we go into the bear market. Now, the bear market was a very choppy move to the downside. And there's a couple of things here that we need to kind of take into consideration, which would be whether or not we kind of enter into the realms of major corrections or not. And actually, for the most part, we don't really see major correction here. I can see we have kind of this initial move to the downside, a correction to the upside. We come down pretty much to a typical area, then we bounce up and then we finish it off with another zigzag pattern. This is known as a triple zigzag. Okay, so it mirrors the idea of a 5-wave movement like what we saw this side, but this particular area didn't reach those Fibonacci levels that you would expect. Okay, so typically when you have an impulsive movement, let me start with this impulsive movement so you can understand a little bit more of what I'm saying this, right? So our impulsive movement here, the trend-based move to the upside, we saw that we crossed this 1.618 Fibonacci level right here before we completed that 3rd wave and before we had the 5th wave, right? Okay, whereas in the bear market, we don't see that. Instead, what we saw was a move that reacted to the 1.236 level. So we pull this over to our low over here, okay? And if I push this across, you can see that this level right here where we bounced, okay, you can see it right here, comes in between 1 and 1.236. 1.618 didn't hit until we got to this lower end here, and we finally had that move down there as well. This actually is a zigzag pattern coming to that low side, okay, and you can see in here as well that we have this idea of a potential zigzag patterns going on as well, okay. So for the most part, this is actually more of a W, X, Y, X, and Z pattern because it doesn't reach those impulsive trigger points. That actually gets labeled up as W, X, Y, X, and Z, and mimics the idea of a 5-wave impulsive movement like we had this side, but it's a very corrective pattern, meaning that this was going to be, although there actually was no guarantee of this Z wave to be fair because we didn't cross down lower than 1.618, but the second that we started to see this slippage to the downside, a Z wave is what we should have been expecting to see. Okay, so bear market's incredibly corrective. And then, of course, our bear market low point actually is anchored in down here. And I'm going to zoom right in on these wicks. And we can see at $3.30. Okay, so $3.30 was a kind of bear market low point. And that happened to be June of 2022, which there was a lot of speculation around whether that was a bear market low point for Bitcoin. It was not. Actually, we went down into November 2022 before we actually got those kind of big reversals in the market. So what we saw here was a very corrective pattern, and we also see a very interesting pattern moving out to the upside as well. Lots of overlap, and that's an interesting structure that we can see here. Okay, we have what I would deem to be a diagonal based pattern going on over this side here. Then we have a very choppy and corrective pattern coming down to this low point, and then we have another kind of diagonal pattern coming up here, another three-wave correction to the downside most recently, and then we start to get into this move to the upside. Why is all that important? Well, it's important because of a couple of things. Okay, so within our structure here, we can see that this is still potentially leading us into a diagonal first wave. Okay, and so let me go ahead and show you why that is. Over this side here, so this initial kind of move from June 2023 to August 2023. Okay, and I know we're talking a lot about history here before we get into 2025, just bear with me, it will make sense. We have a very choppy move to the upside there, and then we have this move coming up into this one higher than 1.236. Okay, and then we have a correction that brings us down here where we have this move higher than 1.618. Okay, it's actually a five-wave movement, and this is known as an expanding diagonal based pattern. Okay, so in here, what do you see? Well, you can see, if I go ahead and draw this in, that the pattern actually expands out rather than contracts in or has a kind of really big impulsive movement to it. And if I pull that in, you can see a lot clearer. What do I actually mean by this? Well, in a kind of expanding diagonal, you have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. In that diagonal based pattern, wave 3 cannot be the shortest. That means that wave 1 out of 1, 3, and 5 has to be the shortest, and wave 5 is the longest wave. Wave 4 is allowed to cross lower than wave 1, but is not allowed to cross lower than wave 2, okay? So it can't be deeper than wave 2, for example. So this particular structure meets all of those requirements, okay? It basically means that this is a potential leading structure. We then see a corrective pattern coming in down here, A, B, and C, and then we're seeing another diagonal-based pattern. And this is a common thing when it comes to what is going on with Uniswap. Okay, so it looks to me like we have a couple of really interesting structures. Our next big move for Uni in terms of probably the next few months from when this video is created is going to be looking for a move around 57.98.9, and I think that is going to be our main kind of trigger point for where we think Uni is likely to go afterwards. Let me go ahead and label this up as a 1.618. Now, for anyone who's not familiar with the fundamental side of Uniswap, needs to be aware that they've actually pivoted not just from decentralized exchange, but to a layer 2 for Ethereum, capturing a lot of the total value locked, and some of the fees that normally would go to Ethereum are going to stay with Uni, and that's going to be really big. So I see Uniswap actually being very explosive in this bullish market. Now, if I'm right about all of these patterns that I'm seeing, I would be looking at this as a wave 1, down here for a wave 3, a wave 2, and a wave 3 is going to be that $57.99, we'll call it $57.99, $58 range, right? We'll have a cooling off and then a final push to the upside. But this might only be a wave 3. And the reason for that is we have the bear market low from 2022 to contend with. So it could be that all of that is a wave 3. We then correct one more time and have a secondary push to the upside. So like Bitcoin did in the previous cycles, we had like a double top kind of situation where we have an initial all-time high, a cooling off, and then a final blast off top before a bear market. And I think that is what is potentially on the cards here when it comes to Uniswap. So the initial targeted range for this wave 3, I think, is going to be a very interesting one. Let me go ahead and put in a few targets for this because it can be a little bit complicated. Bear with me just 1 second while I draw in the Fibonacci levels, which are very important. As we kind of hit that kind of $58 level, right? If we do that, we should be thinking about a wave 4 retracing down into this little range right here, basically between $16 and $33. For the purpose of today's video, we'll use the higher range, $33 range. Okay, and if we hit that, then our final fifth wave move for our wave 3 and our first initial all-time high target range would have to come on in between, let me go ahead and zoom in here and make this a little bit clearer because I can't quite see all the levels, be right here. So basically we'd be looking for 66.73 to 82.72. Okay, that's going to be the first target. Okay, then from here we would have another retracement, and I'll use the higher range target to give conservative, believe it or not, that gives conservative targets of this entire move down here. So we'd then have a retracement coming back down again, looking for 42 towards 17. Okay, so I don't necessarily think it's going to go that deep for that wave 4. That will then have another push to the upside, and that final push for the bear market or for the bull market high point, I would be conservative and I would be looking for uni swap, believe it or not, to be targeting out somewhere between $96 and $124. Now I know that's a lot to take in, and of course this does actually shift and change a few different things because we wouldn't necessarily be looking for this entire structure to be very impulsive all the way up to that kind of $274 necessarily, but it's something of interest. I think if we actually go ahead and pull this into kind of consideration, what we would have here would be a very impulsive kind of ending point. I'm going to remove that off the chart to prevent any confusion and just kind of bring this into view. Why do I think we are looking for something like this? Well, with this 5-wave move over this side, 5-wave moves do not appear on their own. So let me go and find some empty space. When you have a 5-wave structure like this, you can never have 5 waves on their own. They always have to be paired up with at least one more 5-wave move. Okay, so you'd have a 5-wave move, you'd have a correction, and then you'd have a 5-wave move. They typically would have a 3-wave correction, but it has to be a 3-wave correction between these. Okay, and you'd have a 5, 3, 5. This would be the bare minimum expectation. Okay, this gets labeled up as A, B, and C and is known as a zigzag pattern. Okay, you can Google zigzag patterns if you want to, or take part in the Elliott Wave theory course that I created. So as you can see, that would be the minimum expectations. The more bullish ideas are something that would affect multiple years. That would be that you'd have a 5-wave move, like so, like we have. Okay, you'd have your 3-wave correction like you would in a normal zigzag. Okay, and then you'd have another 5-wave move, right? Sounds pretty standard. The differences here are that you would have a move that would cross 1.618. Okay, when that happens, your expectation needs to be another 3 waves and another 5 waves. So instead of just 5, 3, 5, you end up with a 5, 3, 5, 3, 5. And this is labeled up as an 1, 2, 3, 4, 5. Okay, so every 5-wave structure that you see contains a 5, 3, 5, 3, 5. So every impulsive pattern, every trend-based pattern is a 5, 3, 5, 3, 5. Okay, so understanding our bare minimum expectations are zigzags, and understanding that our kind of more bullish targets are going to be 5, 3, 5, 3, 5s. Now, for that to be a case here for Uniswap to kind of reach those kind of really big trending levels, we would have to be looking for 1.618. Okay, for a 1.618 to get here, we would have to be looking at the price action essentially being reasonably high. We'd be looking for this price action to be up at the $627, and I don't think that is something that we should be expecting. So for me, this makes this entire structure just an ABC structure, just an A, B, and C structure. Now, of course, in order for that to make sense, I've had to ignore everything that happened at the very beginning of time here. So all of this kind of initial surge that we had on the Binance chart, I've ignored for this to make sense, which might not be right, but for me, it makes the most amount of sense going into 2025 that we are to experience this significant bullish market. That means a new all-time high around $58, a cooling off more towards 33, another all-time high at around 66 to 82, cool off again into kind of like $42, and then a final push up towards 95 to 125. That would be kind of where my thoughts are when it comes to Uni in 2025. Of course, it's just my thoughts and opinions on the data in the charts as I see it. You can let me know what yours are in the comments down below, or join us in our free Discord server and we can continue the conversations down there. If you found this price prediction helpful, informative, smash the like button. If you're new to the channel, subscribe. And if you haven't done so already, check that video out right there. It's not one that you want to miss.